Hello and welcome to the BNP Paribas Asset Management Talking Heads podcast. Every week, Talking Heads will bring you in-depth insights and analysis through the lens of sustainability on the topics that really matter to investors. In this episode, we'll be discussing green and social bond strategies. I'm Daniel Morris, Chief Market Strategist, and I'm joined today by Arnaud Guillaume-Lamy, Portfolio Manager. Welcome, Arnaud Guillaume, and thanks for joining me.
Hi, thanks, Daniel, for having me today.
Arnaud Guillaume, we're going to be talking specifically about green and social bonds, and you can perhaps help us differentiate them from more traditional bonds. Green and social bonds is still a fairly new market. What have you seen as the main developments over the years, and what do you see as the principal challenges today?
So, starting in 2017, the main challenge was really concentration in terms of sectors and maturities of the curve. At that time, it was mainly agencies, supranationals, and utilities, and mainly long-term bonds. That has completely changed now, and we have every sector now involved, whether there are industrials, utilities, financials, governments, agencies. You can find green bonds in all these different sectors. And in terms of maturities, if you look at the German government green bond sector, which has a 2-year, a 5-year, a 10-year, a 30-year. So you can have green bonds across the curve. So that's something which is very important for the development of the green bond and social bond market. It's very important when you want to have an active management and an allocation to green bonds in your portfolios. Keep in mind that the current green bond market is sizable, more than $2 trillion. We still think that this market should grow further. Indeed, when you look at what's required to support the transition towards a low-carbon economy by 2030, it's around 6 to 7 trillion of funding per year. So there's plenty of space to grow for the green bond market, and we expect green bond primary issuance to be around 500 billion per year. We now have a liquid market with bonds that have similar liquidities than the standard bond. And one thing which is very interesting, in addition, almost 1 in 5 investment-grade Euro corporate bonds being issued this year and last year either was green, social, or sustainable. So definitely not a niche market. I think it's very interesting for investors to switch from an allocation that was potentially small to green bonds into a core allocation.
Those figures will surprise a lot of our listeners to the degree the market's developed. If we go back to the question of how they compare versus traditional bonds, one of the things people talk about is a greenium, that is the price one has to pay for a bond's greenness. Is there really such a price for greenness in these bonds?
I would say that the greenium is some kind of urban legend. You might have from 0 to 7 basis points difference between the yield of a standard bond and the yield of a green bond with the same issuer, same maturity. So it remains very limited. I think it's not really something that anyone should hide behind when talking about performances on green bonds.
You mentioned how the market's now over $2 trillion, so that's certainly substantial. If we compare that, though, to traditional bond markets, it's probably still relatively small. Nonetheless, can investors expect a green investment strategy to behave like a traditional bond solution?
I'm happy you asked the question, because if we look back at performances, 2022 was a challenging year for the whole fixed income market, but especially for the green bond index, which lagged the traditional market. If we look at the performances from the end of 2022 to the end of Q3 2024, it's interesting to note that performances were very similar. For the Bloomberg MSCI Green Bond Index, hedged back into euro, it was 10.37% as of end of September. For the Bloomberg Euro Aggregate Bond Index, it was 10.45. So from end of 2022 to end of September 2024, you have just 8 basis point difference between these two indices. You have a very similar type of risk return. We strongly believe that investors with a medium to long-term horizon should include thematic green bonds into their allocation. You would really have an impactful portfolio with positive outcomes for the planet.
I want to pick up on that point, Arnaud Guillaume. Can you give us some examples of the impact that these investments can have?
So we provide an impact report every year. And when we look at what we've done, we've invested in projects that have avoided more than 540,000 tons of CO2 emissions related to the production of electricity. We have funded projects which have allowed more than 80,000 square meters of green buildings to be renovated or built. That's really something where you will have a real impact. You help funding renewable electricity and energy savings to be included into our green bond investment universe. Every green bond must meet our criteria related to the green ambitions, the integrity of the project, and how the proceeds are used. And we also look at the long-term commitment to finance sustainable activities. We, for instance, were funding a transition from diesel trains to electric trains. At the same time, you have to look at how electricity is produced and see if it is through coal power plants. That's why we need our ESG analysts to check everything to be sure that the outcomes of these projects are positive for the planet. I would strongly invite all the investors to download our impact report. You can have it from our website. We really believe that green bond strategies can provide investors with an effective opportunity to support green projects. It can be a core investment in classic portfolios.
If you'd allow me to summarize some of the key points, Arnaud Guillaume, you talked about how the market's matured significantly over the years. Now you have issuance from a wide range of companies. It's matured to the point that it broadly behaves like traditional corporate bond markets, and it is also sizable, more than $2 trillion. You talked about how regulation has developed and aided as well. And because of all these factors, you really believe that green bonds should be a core part of any fixed income portfolio. We touched on some of the concerns investors have, for example, around greenium, which you felt really wasn't a significant factor when thinking about the total return of these investments. And fundamentally, that investors can feel confident they're contributing to the energy transition and the green transition. Well, Arnaud Guillaume, thank you very much for joining me. That's it for this week's episode of Talking Heads. If you would like more information, please reach out to your BNP Paribas Asset Management contact or check out Viewpoint, our website for investment insights at viewpoint.bnpparibas-am.com. Viewpoint brings commentary and analysis in a variety of formats, from investment outlooks to asset allocation videos and podcasts to help investors make better informed decisions. You've been listening to the BNP Paribas Asset Management Talking Heads podcast with me, Daniel Morris, and Arnaud Guillaume Lamy. Please do join me next week. Until then, take care.
This presentation includes a discussion on current market events and is not intended as investment advice or an offer of products or services by BNP Paribas Asset Management. Please keep in mind that the information and analysis in this presentation is only current as of the publication date.